All right. All right. So give me a second, guys. Okay. All right, good morning, guys. Today is Thursday, August 10th. So as usual, going over US 30 gold and EU. Um, so previously, so for me, I'm down like 1% for today, which is based off of trades I took yesterday. So today I haven't taken any trades. One trade that I was looking at, and this was before CPI. So you can see here before CPI, as we wait for the market to stabilize, you can see this. So in this instance, we had a double SAR in this zone. And this is what we call retest and rejection, or test and rejection, because this candle tested that zone or that double SAR. The next hourly candle retested it and closed above. Also, what my bias for US 30 at that point, so this was during NF. So actually, if I had taken it, it would be against my bias, because I was expecting going this way. So actually I was looking for sell entries, but where I was looking for sell entries was above here at this double SAR right here. But by the time CPI was coming in, prices had not gotten to the double SAR sell zone. So actually, I don't think I would have even taken that buy, because for me personally, my bias was a sell, because I was looking for this rejection from this trend line to continue. But anyway, right? So for anybody who had buy bias, this was a buy entry right here. And I know I sent it in the group. So you can see that if you took that and you let the candle play out, right? Well, I closed it, but you can see the next candle shot all the way up before coming back down. So even before CPI, this candle was ideally like 70% in profit. But that's right how you do those double SAR regions. So same thing, right? When CPI came in, price went to this double SAR sell and rejected heavily. So that's when we got that sell off. So right now you can see where US 30 is headed. We are testing a double SAR buy again. So here, looking at my bias, based off of a trend line, US 30 for me is bullish right now. It's broken. Even the next 20 minutes, we have a candle closure above this trend lines up here. For me, currently, my bias for US 30 is bullish unless this candle closes below this trend lines. So if my current bias is bullish, so right now we did close above in this hourly candle because this is hourly time frame. This CPI candle closed above the buy, the double SAR buy once again. The next hourly candle has retested it and looks like it's going to close above. So if I were to take this buy, so technically the closure of this hourly candle is a buy. However, you would need a stop loss below the SAR you're trading. So this right here is like a 200 pip stop. So of course, not a trade that personally I would take. So I would rather wait for a closure above 35,459 by 2 1-hour candles. And then at that point, I can probably enter it there. But right now for US 30, it is just right until it makes a decision. I really don't have any entry for it right now. Gold, you can see gold, we might get a buy entry right here because we had this candle breaking this static trend line, and the next candle looks like it's going to close above. So right now, looking at gold on the hourly time frame, again, we don't have any entry on the hourly. I don't like trading a green and a red line together, so maybe look for an entry on the 15-minute. So in this 15-minute, we can see we have this this single SAR right here. So if we get two candle closures above, two 15-minute candle closures above 1924, that would be the entry there for a buy on gold. So let me mark this up right there. And this might give for like a tight stop loss. And so this is a possible entry on gold. However, we need to wait for two 15-minute candles. So, but at the very least, I want to wait for this hourly candle to close in the next 17 minutes and then look for an entry. So even here, instead of using the 15-minute, I can drop to the 5-minute after this hourly candle has closed and look for an entry on the 5-minute. So that's one entry on gold, but we will have to wait at the very least for two 15-minute candles. EU, currently EU is retesting this trend line to the downside and is looking like it's going up. So here for me, based off of the trend lines, my bias for EU is for a buy. Looking at the SARs, we have a possible double SAR right here. So I know this SAR hasn't rejected, right? So the extension goes like to 500. So that's the limitation of TradingView. But for here, we definitely have a double SAR. So for me, I try to use the lines I can see in my purview. So for example, if this line was all the way back here, I wouldn't be seeing it. But right now, since I'm seeing it, I see this as a double SAR for a possible buy. And you can see also here how EU rejected from a triple SAR sell region. So for me, since my bias for EU is a buy, I would want this current hourly candle to close above these two SAR buy zones for me to enter the buy. But currently right now, the only entry I do see is for a buy on gold. So we'll just wait to see if we get that buy on gold right here. But we need this hourly candle to close above this trend line. If this hourly candle does not close above this trend line, I am not going to be taking that trade. US 30, same thing. In the next 15 minutes, we need this US 30 candle, hourly candle, to close above all of these trend lines. So the other way, right? So that's one way to find bias, is by using your trend lines. The other way, as I mentioned, was by just using the SARs without being extended, like on the daily timeframes. So for example, here, you'd ideally be looking at the last SAR. So for US 30 in this instance, the last SAR was a sell. So that you can use that if you don't know how, or if you're not good at drawing trend lines, you can use this to find bias. So for me here, since the last one is a sell, right, I can use that as a bias. So my trend lines are telling me US 30 is possibly buying. The SAR, the previous SAR, is telling me to sell. So that's the instance that I would have to weigh between the buy and the sell that I'm getting, and then find an input. So for example, if I find that my sell bias on US 30 is heavier than my and keep in mind, this sell bias is on the daily time frame. This buy bias right here is based off of an hourly trend lines. So in that instance, if I do find that the sell outweighs the buy bias, I can come here and see, okay, what entries can I use to sell US 30? So for example, here on the SAR, you can see we have this double SAR region right here. So this is a good area to sell US 30, but you'd need two candle closures below this zone. The next other area is this one right here. That's a single SAR. The next other area that's good for sales on US 30 is this zone up here. So you need two candle closures, either below either of these zones right here, but you definitely need candles that are retesting. So if your bias is for a sell, wait for these zones. You need 2 hourly candles to reject from this either of these zones for you to sell. If you're looking to buy, again, you need an hourly candle to close above 35,462. And then you need another hourly candle to retest this zone and close above. So that's how you would do that. But you just, in this instance, I like trading when, like yesterday, the trend lines aligned for a sell when we took, or when we marked up the sell on the live session. The hourly trend line aligned for a sell, and the daily bias using the daily SAR also aligned for a sell. But today, the daily SAR is still telling us it's a sell, but the hourly is telling us it's a buy. So that's the only issue with that. Now, EU, so let's see for EU right here. And also make sure that you have a daily. So if you're using the daily SAR for buyers, make sure you have a daily candle that closes below that sell SAR. So for me here, the reason I'm biased for sells on, so if this red candle had not closed below this sell SAR on the daily, my bias wouldn't be bearish. So you need a candle that's closing below the SAR that you're looking at. If you don't have a candle that closed below, the reason I'm pointing that, if we go to the EU on the daily time frame, right here, personally, I'm still bearish on EU until, I know we just got a green SAR, but you would need a daily candle to close above this green SAR now for your bias on EU to change to a bullish bias. But until we have that, I am still bearish on EU. So hopefully that makes sense on how to use this SAR. So EU still bearish on so EU is bearish on the daily. On the hourly time frame, you can see that here it's still bullish on the hourly. So again, we have conflicting, like US 30. On gold, if we go to gold on the daily, the last SAR was bearish. So I'm still bearish on gold. On the daily, I'm bearish on gold. However, here on the hourly time frame, so same thing, all these three instruments, the daily bias and the hourly bias are conflicting. So on all these instruments, the hourly bias is saying to buy, but on all these instruments, the daily bias is telling us to sell. So at this point, right, it's just a matter of which one do you prefer to use? So the hourly is definitely going to may hit TP quicker, but the daily might take a little while to hit TP. So that's when, right, you come back here. So again, daily is a sell for everything. So here I would ask myself, what's the best area to sell gold? We have a double SAR here, another double SAR here. For EU, we have this triple SAR. Now, EU, this is the other thing for EU. EU closed, retested, or tested these three sell SARs and closed below. So this candle is technically the entry candle. So if in the next 9 minutes, this candle closes below this zone, that would be a sell on EU. But you can, right, you can see how confusing it can get. So either stick to the daily or stick to the hourly. So whichever works for you. Yeah, but for me right now, I would rather get buys and then wait for sales later on. Let me know if you guys have any questions. But in some days you will get the daily, like yesterday. Yesterday was perfect. Yesterday the daily and the hourly biases were aligning, but today the dailies are telling us to sell, the hourlies are telling us to buy. So you'll see, so here, what happened on gold? On gold, we had a 15-minute candle closing above, right? But we need 2 candles to close above. So in this instance, right, we have to wait until we get that entry. So since gold is dropping back down, it looks like in the next 8 minutes, gold might be closing below this trend line. So if that's the case, then our bias for gold might start, our hourly bias might start aligning with the daily bias. So for gold, we need this hourly candle to close. So ideally for all of these instruments, and that's going to tell us whether the hourly is going to start aligning with the daily, which is good. If gold closes above this trend line, you'll see that the hourly might be opposite to the daily. So we'll just give all of these instruments 8 minutes to close so that we see where all of these candles are closing, and then we can use them to find entries for the day. So, and also today on the 4-hour time frame, I didn't see anything. So for me, when I look at the 4-hour, I'm shooting for double entries, so double sells or double buys. So on the 4-hour, for me to even think of buying EU, I would have to wait for possibly another 8 hours or 12 hours, because we definitely have double buy SARs right here, but you need 2 4-hour candles to close. So right on the 4-hour, I don't have anything immediate for EU. Gold as well has no double entries on the 4-hour as well. I think yesterday we did. Well, we have some double sells right here. So same thing as EU. We would have to wait for another 8 hours or so. So nothing immediately right now that's gonna close at the 9, or that closed like with the 9 o'clock candle. With US 30 as well on the 4-hour. We have this buy right here, double buy, but we would need another 4-hour candle to close above this, and then you push US 30 up. So for US 30, the only thing I can see, because US 30 is the only thing that has had a closure above a double SAR on the 4-hour, the only thing I can wait for is possibly US 30 to get here for a retest candle and catch price to the upside. However, look at what we have below there as well. We have a double sell area. So it's similar to how sometimes when we do trade order blocks, we don't want to trade like a 4-hour bullish and 4-hour bearish that are around the same areas. All right, just 7 more minutes till this hourly candle closes. Also, for you guys who use like E8, so E8, the E8 prop firm, they also just announced unlimited trading days. And I think yesterday they took out commissions on indices. So I know one issue with the E8 prop firm, their commissions are ideally high, especially like crypto. But they took off commissions on indices, and also they also introduced unlimited trading days. So which is a prop firm I'm also funded with. So just a heads up on that. All right. Markets are just slow. Do you guys have any questions regarding SAR or how to interpret it? Like what's the double SARs?
Yeah, bro, can you just explain again what double SAR? Just one more time. All right.
I'm sorry?
Can you just explain it again? Double SAR.
So ideally SAR is stop and rejection, stop and reversal. That's the term for SAR. In the grand scheme of things, you can also think of it as support and resistance. So SAR is ideally where price should start rejecting from. So if you have a red line, you'd expect price to, when price gets there, you'd expect price to start selling from there. Now, of course, just as with order blocks, one line is weaker or is less probable than two or more lines. So which is why, like yesterday I was mentioning, like if US30 gets to around 33,545 area, it's a nice area for scalping, right? As much as the bias is for, you can see this whole buying pressure, you'll see a rejection that happens when US30 gets here. It's like a quick rejection. So these are perfect areas for scalping because keep in mind, right, SAR stands for stop and reversal. So the more the lines that are together in either direction, the higher the probability of a reversal from that point. Now, since personally, like for me, I'm not a scalper, I don't use that for scalping. I mean, when I do, I tend to over leverage, so I don't use that. So if my bias, for example, here is for a sell, let's say I have a bias on the daily for a sell, and you can see US30 just formed an SAR buy. But for me now to change my bias for to a buy on US30 based off of the SAR on the daily, this daily would have to close above this SAR that has just been formed. So this SAR that has just been formed, it's telling you this point 35,540 can be used as a reversal point. But if I close above this line that I've just formed and it's a green line, it's possible that US30 will keep pumping up. So that's how to, right, think of SARs talking to you that way. Green zone, if I form a green line, if I close above it and retest, and of course on the daily, if you're waiting for a retest, you might be waiting for 2 days. But think of it, if I close above this zone, price is bound to go up. But SAR, I still stand for reversal, which means I can be reversing from this point. So if you're looking to use this as a buy, you would need to wait for me to close above this zone. So that's the basics of it. So if you understand what that a green line means buy, a red line means sell, and for a nice buy, you need a break and retest, or you need 2 candle closures. And right, so long as you understand that and you bring that to lower time frames. So for example, for me here, this would be a critical area for US30 if I was a seller. If I had a bias for selling, because what I would do right here, I wouldn't want this candle, this hourly candle, to close above this SARs. So what if I was a seller right here on US30, what I would want to see is this candle closing below there, right below here, and then I wait for the next hourly candle to retest these zones and close below, at that point, I would sell US30. So that's how I'm thinking as a seller. So same thing as a buyer. That's why I said, like, if personally, when this CPI, this entry right here, I wasn't looking for buys on US30. If I did enter this trade, it would just have been like just a gamble, because my bias, which I'd gotten from personally, I don't use the daily, I don't use this daily SAR indicator or SAR indicator on the daily to find my bias. For me, I just trade, I use my trend lines as a bias. So you can see before CPI, US30 had hit these trend lines to the upside, and it had started going down. So actually for me on US30, I was looking for sells. But if I was looking for buys, so same thing I'm pointing up there, or I just showed you guys up there with sells. You saw that this candle tested these double SARs and closed above. So if I was a buyer, I would have wanted to see the next candle test the same area and close above. And that would have given me a confirmation for buying. And before CPI, like a few minutes before CPI, this trade was already 60% in profit. So that's the idea behind SAR zones. So same thing, right? I'm buying because it's telling me, hey, this is a buy zone, but for you to buy, you need to wait for me to get tested, and then you need to wait for the next candle to confirm the testing. So you see, so for example, whatever is happening right here on this SAR cells, you can see we have testing, but look at how the next candle opened. The next candle is opening bullish. So if this candle opens bullish and closes above, then the sell is invalidated. That's why you always have to wait for a nice test. So another example here with EU, what did EU do during CPI? It went all the way, it rejected or tested these three SAR sell regions on the hourly time frame. So if I'm a seller on EU, what would I want? I would want this candle. So keep in mind, not every candle will give you a retest. So you just want two candles closing below for sells and above for buys. So I'm probably not going to stop use the term retesting, because not every candle will give you a retest. So if I was a seller on EU right now, this would be a sell on EU, because you had that candle that tested the sell SAR, and then you had the next candle that validated this test and did not close above. So if I was a seller on EU, I would be in this sell
You wouldn't,
right here.
even if you were seller though, you wouldn't wait for it to cross those. I know those are buy SARs, but you still wouldn't wait to cross those just to be safe.
No, I mean, with how I trade, no, I do not, because I would have to. I would look here. I would look at, so long as everything aligns. So for example, right now, personally, I wouldn't take sales on EU because we rejected off of this trend line right here. So I'm just giving an example if I was a seller. So, but I would have to find my bias. So personally, right, this is not a sell I would take, because actually my bias for EU is for a buy. The reason for that is because we rejected off of this trend line twice to the downside, and looks like EU is going back up to that trend line. So this is not, so for me, my bias is a buy for EU. But if I was a seller and I'm using the same SARs, the same logic, this would be an entry for EU. Now, so same thing you've mentioned, right? If I'm a buyer, so my bias is a buy for EU. So this would be a buy for EU right here. And this one can literally give you a 0.5 or a 5 pip stop or whatnot. So if I was a buyer, I would want ideally my stop loss. So stop loss should be below the SARs you're trading, of course. But if you're trading this, unless you want to have a 5 pip stop, which you can, that would be the entry right there. If you want 1:2, you have a 6 pip stop and a 12 pip TP, right? That's how you trade. But for me, I recommend at least have a 30 pip stop. So that would be a stop loss right there. If you want a 1:2. So for me, since my bias is a buy on EU, this is a trade I can take right here. Let me see. Yeah, so I will take this trade right here. Give me 1 second. There's the TP would have to be 1.0. I will use a tighter stop, 1.10993. The reason I'm looking at that is where 1.10993. So EU would have to come all the way up here. All right. So give me 1 second. Let me see. I want to do something. I will use a 10 pip stop. 10 pip stop and 20 pips TP. Yeah, because I don't want my TP to be way above this 3 red S, because what we know here is that we have sellers on EU right here, because you can see that rejection right there. 10 pips, that's a tight stop loss. Let me see. So I will do see. All right, give me 1 second. Let me just put this in. Risking that. Okay, yeah, I just entered that trade with a 0.5% risk. So I entered where price currently is right there. So it's definitely like such a tight stop loss, right? 10 pips. But I'm just waiting for or hoping to get that rejection real quick to the upside. If you want to be safe, use a 30 pip, which is what I recommend. But for me, the reason I'm not using a 30 pip is because for me to get a 1:2 using a 30 pip stop loss, my TP would have to be above this 3 SAR. So if we didn't have this 3 SAR cell zones, I would use a 60 pip TP and 30 pip stop loss. But since we have this zone right here where we know sellers are sitting based off of CPI price action, that's why I would rather, it is a tight stop loss, but that's why I would rather use that for now. I don't think I've ever used a 10 pip stop on EU or anything. All right. What else? What else? So US 30 closed bullish, right? So closed bullish and closed above the previous swing or the previous zone, this lower high, this high high. So for me, right, my bias for US 30 on the hourly is a buy. For me to change my bias on the daily to a buy, I need this daily candle, or I need a daily candle to close above this SAR zone that's right here that has just been established. But right now on the hourly, right, on the daily, I'm still a sell. On the hourly, I'm a buy. So I hate when that happens because it's just confusing sometimes. And maybe such days are the ones that you just have to stay out of the markets. So if I get stopped out of this EU trade, I'll just call it a day, and then I'll just observe what happens in the next 4 or so hours. But for EU, definitely this region where price currently is, that is a interesting area for a buy, or possible area for a buy based off of bias. This zone right here, as I did the opposite, if I was looking to sell EU, this is an entry for, so the current entry we are in right now is possible entry for both a buy and for both of for a sell, but it just depends on what bias you are trading. So for me right here, the bias I'm trading is on the hourly. The sell entry, the bias would be for this the daily. And if we get stopped out, so the thing with having such a tight stop loss is you get you bring in room for being wicked out and stopped out or stop hunted. So if EU comes back up, I will enter using the same parameters, but instead of using the hourly, I will go down to the 5-minute or the 15-minute. So on the 15-minute, you can see actually on the 15-minute, that's the entry on the 15-minute. If this 15-minute candle closes, because we had this break, so you can see we have a SAR buy on the 15-minute time frame, and then this candle, previous candle, broke and closed above. Now, this candle is actually doing the retest. So if this 15-minute candle retests and closes above and looks like it might be around the stop loss area and closes above, I will still re-enter the same trade with the same parameters, and this time probably use a wider stop loss. Let's see. The same zone would be, okay, so I got wicked out of that 10 pip stop loss thing. But for me, right, what I'm observing what's going to happen here, because for the 15-minute, we definitely closed above. Right now, we are retesting the same zone. So if this 15-minute candle closes above, then I'll take another buy. However, if it closes below, then I'll just call it a day. But this is my last, or would be my last entry. So that trade right there got worked out. But what I would want to see is for price to start reversing back up. And then what that would tell me is that the 15-minute entry would be becoming valid. So this is going to take like 3 or so minutes. So this is Thursday, so that was minus 0.5. And the best thing with these entries is the 1:2 entries, or the 1:2 risk to reward. So if I take another trade with the same risk and it wins, and EU is pulling back up right now, and it wins, I would be up 0.5%. So that's the best thing about making sure you have like a 1:2 entry for this SAR strategy. So in the next 3 minutes, what I want to see is this 15-minute candle closing above 1.0. What is this? Let me put a line here. I want to see this 15-minute candle close above there. And in this instance, instead of using 100 pip stop is like, you just have to get like a sniper entry for such. All right, let's see if that happens. If it doesn't, then we'll just call it a day, and just look at the rest of the day. Just look at this entries, right? Look at where US 30 currently is on the hourly. Look at those entries. Gold right now, gold is nowhere on the hourly. So maybe on the 4-hour, look at where gold is. So you can see where gold is right there. Right? Double SAR for sell. EU, you can see EU has this double SAR for buy, and also the triple actually SAR for sell on the hourly. So, watch for these zones. Because keep in mind, overall, that daily bias until, for everything, the daily bias is bearish for everything. So watch those zones. Any questions? I don't think we'll get that EU closure above this zone in the next minute and a half.
Okay, so on the hourly, the 4-hour, and the daily go bearish, right? On everything.
No. Everything is bearish on the daily.
Yeah. Everything is
But
bearish
on the hourly, everything is bullish. Actually, other than before this gold candle closed, right? It was bullish because it broke above this trend line to the upside and retested and closed above. So for me, before this hourly candle that just started 14 minutes ago, on the hourly, I was bullish on everything. But on the daily, right?
Oh,
Because
yeah.
for me, how do I use the daily? Personally, the daily bias, I look at the previous SAR, the current or previous. So for
Yeah.
example, right now, the only way I would be bullish for US 30 on the daily is if this candle closes or one of the next candles close above this SAR buy that has just been printed. But until then, I'm using the last closure of an SAR. So on the daily, you can see US 30, the last candle closure of an SAR was this candle that closed below a sell SAR. On EU, the last candle closure was below a sell SAR. Yes, we have printed a buy SAR, but for me to change that daily bias to a buy, I need a daily candle to close above this. So if tomorrow, when we're trading tomorrow, this daily candle that ends today will have closed above this green buy SAR, my daily bias for EU will be bullish. Same thing for US 30, same thing for gold. So if you want to do the 4 hour is the same thing, right? So the question is, what are you using for your bias? So for me on the hourly, I use trend lines. On the daily, because I don't draw trend lines on the daily, I use the SAR. If I were to do it on the 4 hour, I would also do the SAR. Also, right, I can still do the SAR on the 1 hour right here. So you can see on the 1 hour right here, if you're using this SAR as a bias detector, the bias using the SAR is a bias. So the question here is, if you don't use trend lines, just use the SAR for your bias. If you use trend lines like I do, I will use trend lines on the hourly.
Yeah, so yeah, on the hourly, yeah. But the thing is, so the candle, the 2 candle closures have to happen on the hourly. Is that right?
Yeah, on the
Or is it-
hourly. So the higher the time frame you go, you don't want 2 candle closures. So for example, on the 4 hour time frame, sure, it's good, but are you willing to wait 8 hours to enter a trade? Same thing on the daily. If you get 2 candle closures, if you're waiting for 2 candle closures, it means you'll wait for 2 days. Are you willing to wait for that?
Okay, so on the hourly, you need at least 1 to close below the trend.
No, on the hourly, I always do 2. On the 4 hour is when I can gamble with 1.
Okay, so on the hourly, you need at least 2 to close below.
Yes.
If you're looking for the sell.
Yeah.
Yeah.
Right. So I would just say find what works for you with a daily bias. Yesterday I know I sent a video in the chat. So I like this guy right here. His name is Kimmel Trading. So he goes over he even has a video on finding a daily bias, and he talks like of the power of 3 of the Judah swing. And I know like Steven in the group normally talks about the Judah swing. So right, he talks about how to find a daily bias every day. And you can watch his videos to find, I think the daily bias video was the one before this. So just find a way to get you your daily bias. If you don't use trend lines, or if you find the trend lines are not good to give you a daily bias or even an hourly bias, just use the SCR to give you that hourly bias. So you can see like here, my trend lines were telling me that on gold on the hourly, the bias was a buy. But you can see here, if I looked at the last at the last SAR closure, gold was for a buy. So right now, if gold closes, and this is on the hourly, if gold closes below this hourly time frame or this hourly SAR, I can change my bias to a sell. So same thing right here, even using my trend lines, right? If gold closes below this trend line, it will have invalidated this bullish move right here. So let's see about US 30. So US 30, I am bullish right here on the base off of trend lines. So if I go to US 30 on the hourly and just find a bias using an SAR, you can see the last SAR that US 30 closed above was a green SAR, and ideally, right, that is bullish. So you can see the SAR on the hourly is supporting my bias even on the trend lines on the hourly. So just find, right, what works for you. Would you rather use trend lines for bias, or would you rather use SARs? Also, right, do the other thing. Would you rather use a daily bias for entries, or would you rather use an hourly bias for entries? So for example, so this EU trade, this 15-minute candle closed below that green SAR that I was talking about. So no re-entry on EU. So, right, so picking one, either the hourly or the daily, will will save you from days like today, right? Days like today when we had the hourly. So for example, the hourly on EU for me is bullish, but the daily on EU is bearish. Now, right, that's one reason why this EU trade, I think I took it away. No, this EU trade hit stop loss, because when you get the hourly telling you one thing and the daily telling you one thing, but the opposite is also true. Having two confirmations for bias is also good, like days like yesterday. So days like yesterday, everything was bullish. I'm sorry, everything was bearish on the daily time frame using the SAR. Also on the trend lines, on the hourly, everything was bearish. So that's why we were able to catch ideally the gold sell and also the US 30 sell that I'd marked up. So just know that whether you have one confirmation for bias, yes, it's good because it's going to avoid days where you're getting confused by fake outs, or one thing is telling you another and the other is telling you the opposite. But just also remember, having one or more confirmations, the days that both confirmations align and both of them are telling you to buy, you'll get better entries. So just think about what works for you. If you find it confusing, sure, just start with one, learn how it moves, and then start easing in other timeframes. Like Desire is doing. I think Desire said he's where is it? He's using, so just as I do, like for me, right? He's using the 1 hour and the 4 hours. So that's why you see me here. I have these charts right here. These are the hourly. I think one is on the 4 hour. So I normally start on the hourly. Am I seeing any double entries? Okay, if I don't see that, I go to the 4 hours, so that in my mind I know 4 hour candles close at 9:15 p.m. Or 9:15 9. So again, it repeats. So if I see a double entry and maybe it's not, so for example, this gold entry, if this 4 hour candle closes here at 2:38, I know the next 4 hour candle is going to go to open at 1 p.m. Eastern Standard Time. So subconsciously, I know that when it gets to 1 p.m., I come back to the charts and then I look at what gold is doing. So if gold will have closed below here, then it's for me to know that, okay, I need the next 4 hour candle to retest this double sell area. And then I need to see some price action, what's going to happen there. So same thing. I don't know if you guys watched that video by that guy, Kimmel. So he talked about the Judas swing. So if for me here, this 4 hour candle on gold closes below this double SAR, and then based off of all my confluences, I'm expecting gold to drop. So even on the daily, keep in mind, if you're using the SAR as a bias, gold is bearish. Gold is bearish right here. That's the hourly. If I go on the daily, gold is bearish because the last closure above or below an SAR was below a red or a sell SAR. So if I'm expecting gold to be bearish, based off of that ICT concept that is called the power of three, what I would be expecting is this. I would be expecting the next 4 hour candle to create a Judas swing. So if all my probabilities are telling me that this 4 hour candle will go down, I would expect manipulation. So that's the Judas swing. If you look up what a Judas swing is. So I would expect a Judas swing, and then price goes back down. And then he talked about, if you get that Judas swing, ideally you're looking for, in this case, if I'm looking for sells, I would be looking to sell between the wick created and the opening of the body. So if I'm expecting this next 4 hour candle to be bearish and it starts off bullish, I would start looking for sell entries during that week that it's going to create, because if it's going to start as a bullish candle and I'm expecting it to end up as a bearish candle, I should be looking for sell entries during that slight bullish move, which ideally should work as manipulation. So hopefully that makes sense. Like for me at 1 p.m., that's what I'll be looking for. I'll be looking at how the 1 p.m. Eastern Standard Time candle opens on gold. So that's what I'll be looking for. Because if this 4 hour candle closes below this sell, look at how many sell SARs it would close below. It would have closed below one single one and two double ones. And we've had an entry like this on US30, and you can see US30 is ideally doing the same thing as well here. So if this 4-hour candle closes bearish below this 3 SARs, I would be looking to, and I would expect the next 4-hour candle to start off bullish, but then eventually, based off of the probabilities and even the daily bias, and even at that point, the hourly bias, because it will mean that gold will be below these trend lines and back on the downtrend, everything would be pointing towards a sell on gold. And at that point, I would look for entries on lower time frames to sell gold around this zone. That's a buy. To sell gold around this zone with stop loss either below the double SARs or below all of the 3 SARs. To be safe, at the very least, right, use a 30 pip stop. If you want a 1:2, 30 pip stop, 60 pips TP. That would be the trade right there. And this trade would come. So the closer to the SARs, the better, because it will improve your risk to reward. So if you ask me, at 1 p.m., if this candle, 4-hour candle on gold closes bearish, the best area to look for sells is around 1920 and 1919. And yesterday, I don't know if you guys remember yesterday. Yesterday, I mentioned that 1920 and 1919 are the next critical sell areas for gold, because I still remember that we had these double SARs. So that's my logic of entering these trades. Any questions on that? All right, perfect. So just decide, are you going to be using the daily time frame for bias? Are you going to be using the hourly? And just be aware of the pros and cons for this too. Now, like on the opposite, if we were looking for sells, and I did say that if I was looking for a sell, this would be a sell entry, right? The trade would be in profit, but for me, I was looking for buys. So back test and see what works for you. See what time frame gives you a very good bias, a very bias with high probability, and then just use that going forward. All right. Any last questions? If I do get this trade at 1 p.m., I'll send it out in the group, and then you guys can observe it from there. All right, I'll talk to you guys tomorrow. All right, see you guys.